Financial Literacy, Understanding Your Pay. Module 1, Starting Your First Job in Canada. How many hours do you need to work to buy that new iPad or tablet you've been wanting? How do you make sure your employer has paid you correctly? Why are there deductions from your pay? How can you save money for college or university? By understanding your pay. Whether you've already started working or you're looking for your first job, congratulations on this important milestone. As you navigate the working world, here are a few things to keep in mind to help you understand your pay. Make sure you are paid accurately and save for the things you want and need in life. There is a difference between what you earn and what gets deposited into your bank account. Your pay statement tells you everything you need to know about your earnings and deductions from your pay. You have rights and responsibilities as an employee. The best way to save for the future is to save a little each pay, every pay. Before you begin working in Canada, you need a valid social insurance number, otherwise known as a SIN. You can get a SIN from any Service Canada office, or your parents may have already gotten you one when you were born. Your SIN is unique to you, just like your fingerprints. Be sure to keep your SIN card or letter in a safe place. It should only be used to identify you to the government through your employer, pay taxes, contribute to government pension plans, or use government services. Never use it as a general ID. Only carry it with you when you need to show it to your employer after you have been hired. When you start working, your employer will ask you to complete provincial and federal personal tax credit forms. These forms help your employer determine the amount to deduct on your pay. Most Canadian employees get paid by direct deposit, so you will also need to provide your bank account information to your employer in order for your pay to be deposited into the account. Did you know you must be a certain age to perform some jobs? This varies by industry and across provinces and territories. So, employers will ask for your date of birth to ensure they're not breaking the law. Before you begin work, your employer will advise you on how much you will be paid and whether you will be paid by the hour, a daily rate, commission, or a set salary for a certain period of time. Your rate of pay will be shown on your pay statement. Your employer will also tell you when and how often you'll be paid. Every 2 weeks or weekly are the most common. There is a minimum amount of money you must get paid for every hour of work. This is called the minimum wage. It covers all employees, including students. It varies widely across Canada, depending on provincial or territorial law and the type of work you do. For example, there is often a different minimum wage for people who work in restaurants or coffee shops because of the extra money they get as tips from customers. Every organization has standard work hours. When you are first hired, you should be provided with your work schedule ahead of time. Sometimes, though, the government won't allow young workers to work more than a certain number of hours or during school hours. If you work in a store over your summer vacation or during the winter holiday season, your schedule hours might increase. Look at your pay statement to make sure you're being paid for the correct number of hours you worked each pay period. By law, in most provinces and territories, your employer must provide you with an unpaid 30-minute meal break after 5 consecutive hours of work. Each province and territory has statutory or public holidays, along with conditions for whether or not you need to be paid for these holidays. You can ask your employer or your Employment Standards Board for specifics. And then, don't forget to check your pay statement to make sure you are paid for the holiday if you're entitled to it. You are entitled to vacation pay in every province and territory. This is accumulated from the first day you start working until the day you leave or take vacation. Depending on where you work, vacation pay may be added to each pay, paid while you take vacation from work, or paid after you leave. Don't forget to look for your vacation pay on your pay statement. Even if you're the one who quit to go back to school or start a different job. Financial Literacy, Understanding Your Pay. Module 2, Getting Paid. Anyone who has ever gotten paid knows that there is a difference between what you make and what actually goes into your bank account. So, where does the money go? By law, your employer must deduct Canada or Quebec pension plan contributions, employment insurance, and maybe Quebec parental insurance plan premiums, and personal income tax from the amount they pay you. There are, however, some cases where you may not pay personal income tax because your earnings are too low. This could potentially apply to you if you are a high school, college, or university student who only works part-time. Are you over the age of 18 and under the age of 70? One of the deductions you will see on your pay statement is for the Canada Pension Plan, or CPP. If you work in Quebec, you contribute to the Quebec Pension Plan, or QPP, instead. Your deduction, plus your employer's matching contribution, is sent to the government after your pay is processed. It may seem early to think about this now, but this money is for your retirement. Another mandatory deduction is employment insurance, or EI, and Quebec Parental Insurance Plan, or QPIP, if you work in Quebec. EI provides temporary financial assistance to unemployed Canadians while they look for work or upgrade their skills. It also provides benefits if you are sick for a long period of time, on maternity or parental leave, or caring for a family member who is seriously ill. If you are in Quebec, the maternity and parental leaves are covered under QPIP. There are conditions that must be met to qualify for these benefits. For example, if you quit your job or return to school, you may not qualify. Personal income tax is collected from working Canadians on behalf of the federal, provincial, and territorial governments to help fund infrastructure projects, healthcare, post-secondary education, eco-energy programs, and more. The amount of income tax you pay is based on the amount you make for the year, minus any exemptions that may apply. For example, post-secondary tuition fees. In some cases, your employer might also deduct money for things such as benefits, union dues, meals, or uniforms. You should find this out when you are hired. You may also choose to automatically transfer some of your net pay to a separate savings account. This can be a good way to save for long-term goals, such as college or university. Did you know that if you save $20 a week, every week, you would have over $1,000 in less than a year? And over $5,000 in 5 years. Start saving the moment you land your first job, and you may soon have enough money to pay for that new car or even a house. If you're really good at saving your money, you may even be able to retire early so you can spend more time relaxing on the beach, traveling, volunteering, or doing whatever else interests you. Financial Literacy, Understanding Your Pay. Module 3, Your Pay Statement. Every time you get paid, you get a pay statement so you can understand and verify your wages. Here is a sample pay statement for an employee outside of Quebec who worked 35 hours in this pay period. The pay statement tells you the pay period and pay date, the total hours Sophie worked, Sophie's rate of pay, Sophie's gross pay before deductions, Sophie's year-to-date YTD amount, which is the total amount paid with this employer so far this year, CPP contributions, EI premiums, income tax, the total deductions made, and how much was deposited into her bank account, her net pay. When you receive your electronic or paper pay statement, you should always review it to make sure your earnings and deductions are correct. If you have questions, talk to your manager or the person in your company who does payroll. Your employer sends the amounts deducted from your pay for personal income taxes for CPP or QPP, EI, QPIP if you are in Quebec, as well as the amounts they pay on your behalf to the federal and provincial governments. By the end of February of the following year, you will get tax information, which is called a T4. If you live in Quebec, you will also receive a Relevé 1. This is a summary of all your earnings and mandatory deductions for the year. You use the information to fill out your income tax return, which must be done by April 30th. It is important you file a tax return. as you may be eligible for a refund, depending on your circumstances. Now you know the basics of getting paid, how deductions work, and what actually goes into your bank account. Knowing the difference between the money you make and the money you keep is very important. So is doing the most with the money you have. Here's a little piece of advice. Be careful not to spend more than you make and pay yourself first. What does paying yourself first mean? It means setting aside some of your pay. Financial planners recommend saving at least 10% each pay before you spend any of it. It is a good strategy to help you through those rainy days when you might not have as much income, or to save for the future. Every year, the Canadian Payroll Association surveys employees across the country, and we continually find that more than 50% of working Canadians live paycheck to paycheck, with no money saved for the future. It is a hard cycle to break free from, so we'd like to help you become financially fit right from your first job. No matter how much you make, if you are saving for education, a car, a house, or just as important, retirement, saving a little today will pay back big time in the future. Ask your employer if they have a savings program you can contribute to, or if they can deposit a portion of your net pay into a separate savings account for you, and then watch your money grow each month. Remember, before you spend money on things you don't really need today, that money could be worth thousands of dollars tomorrow if you save now and save often. It's all about understanding your pay.